Hi, my name is Gary Swart. I'm a partner at Polaris Partners. We invest in some marketplaces. Previous to this, I ran a little marketplace called Odesk. I was the CEO of Odesk for about 8 years before we merged with Elance and created a company called Upwork. And I know a few things about marketplaces, maybe too much. But now as an investor, I struggle because I feel like I'm the person who knows too much. And we just learned a lot from some A-round investors who I think they're, arguably there's a little bit more Excel than PowerPoint. And now we're going to talk to some investors where it's a little bit more PowerPoint than Excel. And so how the hell do you make a decision? So can you tell us a little bit about your fund and some representative marketplaces?
Sure. Hi, I'm Stephanie Palmeri. I'm a partner at Uncork Capital, previously SoftTech VC, so we just rebranded it last year. We're investing out of a $100 million fund. We do exclusively seed. Probably the biggest names in our marketplace portfolio, Poshmark. The last time I was actually in this ballroom was when Poshmark announced their growth round back in December. Postmates, Style Seat, Melody is going to be here later today. Hired, and a number of others that are smaller but growing. So we've got a nice marketplace portfolio.
Excellent. And Mark?
I'm with MHS Capital. It's an $80 million fund. There's just two of us, and one of our key areas is marketplaces is primarily seed. We'll do a little bit of early A as a starting point as well. We run a very concentrated portfolio, so we typically make about 4 investments a year. In terms of representative investments, it would be companies like Udemy, Thumbtack, Indiegogo, Kindly Care, Autolist, Workyard, a bunch of others.
Well, congratulations to both of you. Those are all great companies. So let's cut right to the chase. How the heck do you know? Like, what are the must-haves? What are the early signs that there's something interesting?
So I guess I'll start. I think you're right. You know, there is definitely not an Excel to look at, and if there is, like, the numbers are just complete guesses, and your guess is as good as my guess at that stage. So the things I tend to look for, and there's a spectrum. You know, there are times we've invested in marketplaces pre-launch, and then there are times where we've invested in marketplaces where they've been going. But when I think about the folks in the room that are kind of first-time founders, most likely you're going to get backed with a bit of traction, not completely pre-launch, right? And from that perspective, I'm looking for the early signs that that you have something that can change behavior. And I heard a lot of that from what I could hear from the back. That behavioral change and that creation of addiction is really important. And so while I may not be able to see a lot of volume, I am looking for the early signs of like repeat usage amongst at least a small number of participants in the marketplace. And kind of the second thing is how much focus are you putting on the side that kind of interacts the most, right? So are you building tools for, you know, if your supply side is actually the one that has the most interactions in the system, are you actually focusing on creating value for the folks that you actually need to be there in order for transactions to happen on an ongoing basis? So I'm kind of looking for those early indicators that you're satisfying both sides, but that you know there is one side that's going to stick around, and that's the most important side to be there for things to start working is early indicators that it's there.
And when you say stick around, do you mean the value after the match, or there's
yeah, I mean coming back, right? So you know, again, another we could talk all the little early indicators, but you know, if you match in the platform and you go away and there's no reason for you to ever come back, and the transaction to then continue to happen off the platform. With that same provider, well, then you haven't created a lot of value from a marketplace perspective, right? So in an ideal scenario, both the buyers and the sellers, or the suppliers and the you know, the buyers on that side, you know, there are you're getting, both sides are getting value from matching to other individuals on that platform or other businesses on that platform, and not just the same folks over and over and over again, right? And so again. And there's variation, right? And we can go into all those details.
Mark, how about you? Must-haves, or what are the early tells?
I would say that a lot of it is non-specific to marketplaces. I mean, it's really about the team. It's sort of about grit, fortitude, and insight. And you're really dependent upon the entrepreneur and the founder as the earliest investor to really just figure things out. And so the question is, like, do they see the future better than you? Hopefully a lot better than you. And so in some ways they're educating you on the opportunity in the market. And I think part of the challenge in even thinking about this panel is one of the things I try to do is have a very open mind. I don't have rules. I don't think too much about what I'm looking for. So I've had to sort of reflect a little bit on what are the characteristics when I look backwards at the things that we're looking for. So, you know, how much is the founder thought or founders thought about how they're going to acquire supply? We tend to bias towards loosely managed marketplaces where there's probably less frequency than something like Uber. Companies like Thumbtack and Udemy, you use them a lot less frequently, and so aggregating supply is actually one of the critical factors. And two is that we generally look for companies where we believe there's actually endemic demand, meaning like if your mother gets sick and can no longer take care of herself, you are going to you're going to have one of two choices, or one of three choices. Take care of her yourself or another family member, put her in a home, or have senior care at home. And so we generally look for markets where that's well established, and actually, I think figuring out where you might have the opportunity to distribute is critical, but having a clear plan and demonstrable, maybe early signs that you can aggregate supply with having very little demand is sort of what we found is a key differentiator. And then I think the last component is we generally, not always, are looking for something where we believe there's some sort of proxy to say, hey, this is a really big market. So with Thumbtack, it's you look at the yellow pages or any sort of small business marketing, and the numbers just ginormous. Or you look at something like a company like AutoList, where they're going after companies like AutoTrader and Cars.com. And Car Gurus, there's about $35 billion in auto advertising spent a year just in the US. You know, I can sort of go on. And then with Udemy, it's like, will learning really take off? You know, at the time, I think there was this strong bias amongst investors and the crowd that people would not pay for online learning. You sort of had the emergence of Khan Academy and YouTube, and there was actually there was a couple companies that sort of failed in the space that were relatively well known amongst the venture community, and there was sort of like this wave of despair. But we, based on some of the things that we'd invested in over the years, we felt like people who are really committed actually want to pay. It's part of their commitment to doing something. So that hopefully that gives you a little flavor.
Somebody told me once when we were raising money at Odesk, they wanted to see that if we bought one side, the other side would come organically. They said if you have to recruit for both sides, it's not a marketplace. And you know, you think about Uber, if they bring drivers, riders come. For Odesk, if we had jobs, we could get all the workers we wanted. Thumbtack, if they can aggregate the providers, the clients are there. So is that a must-have, or do you look for? You said you don't have any must-haves, but are there? You know, there's got to be one or two must-haves that you have to have besides the characteristics of the team.
I mean, yeah. I mean, I think market size and team, and then a clear idea or hypothesis. Even if it's wrong, you want people to have a relatively clear vision of the future, maybe that they don't hold tightly to, but you're looking for their direction. If they don't come in with a clear idea of, here's my go-to-market, or here's my playbook that I'm going to try out, have they really thought deeply about what they're trying to do? And you need them to be able, it's more about discussions like that. As far as, I think actually in the beginning of marketplaces, it's quite messy. You kind of have to fake it before you make it. And so the idea that one side will bring the other is not totally true. Like, you need to kind of manufacture that in the beginning. And so, and I'm not saying that that you do things that are unethical or that you're trying to hide things from investors or employees, but essentially like that's where some of the magic comes in. You know, early stories of Airbnb, like they basically recruited most of their supply from Craigslist. You know, before Craigslist sort of shut down that path. Like there are ways in which you have to go ahead and figure out how to do things that are non-scalable in order to create the flywheel, and it's very difficult to do that.
Anything to add?
I'll give you an example from our portfolio. So for those of you that don't know Poshmark, Poshmark is a peer-to-peer marketplace where women sell fashion. We initially started with women selling fashion out of their own closets. We've moved into to much broader retail merchandise as well over the years. But you know, I think there's two lessons from something early that the Poshmark team did. The first 100 users on Poshmark, and I was one of them, but I was definitely did not fit this user profile. I was one of them because I was an investor. We're all bloggers, and they were all fashion bloggers, and they were women who had enviable closets, and they had small to medium-sized followings. They didn't necessarily have millions of followers for their blogs, but they had dedicated followings to their blogs, and these were women whose closets had attracted an audience, and the audience they'd attracted wanting to know where these women shopped. They wanted to wear the looks these women were wearing, and suddenly now, through Poshmark, they were able to actually make their literal closets available online. And so the very first Poshmark users were roughly 100 fashion bloggers, who lived in a relatively small geographic radius, but the interaction was happening online. And so we had this great source of supply, but we also, on the other end, had a great source of demand because one, those bloggers themselves were interested in buying each other's fashion, and then they could then open it up more broadly to their audiences. The second thing that Poshmark did that's interesting, I think this touches on Mark's point a little bit, which is, you know, they're messy in the beginning. I actually think it's really unusual to see marketplaces succeed if they've built a lot of structure from a technology standpoint in the early days, because the truth of the matter is, what's going to make your transactions work, you probably don't know in the early days. And there's going to be things you may go down the path of building, and you'll waste a lot of time building for something you believe will be true, and then it won't be true. And so there's a lot of duct tape in marketplaces. And when I think about one of the things, again, that the Poshmark team did that was really smart was in trying to figure out how you taught people who were early users of how to do a listing and how you created almost real-time liquidity in the marketplace. Manish and Tracy introduced this concept called a Posh Party. And what it was during this hour of this day, we're all gonna get onto Poshmark on the app, and we're gonna all list something according to a theme in this 1 hour. And so the theme might have been leopard print, or the theme might have been Lululemon. And so it gave women who were joining Poshmark for the first time a very simple, concrete thing to do. It wasn't I open my closet, see 500 things, and not know what to list. I was like, I'm gonna look for the Lululemon in my closet, and I'm gonna list that. And so it created these magic moments. And we began to realize that the Posh Party was not just this thing to get initial liquidity, but it was actually a really core feature to the company. And it actually it's now a part of the product. So we ended up productizing this thing we did to spur early liquidity, right? And so if the company had gone out to build a Posh Party to start, I'm not sure it actually would have looked like what Posh Party needed to be. And so it actually happened just almost very organically, and then you build the technology around it to support it.
So a couple valuable lessons there. One is mavens. They had the leverage one to many. So if you get the 100 influential mavens, then your reach is that much better. Thumbtack had a great hack by offering a utility to providers to get them onto the platform, which faked the chicken, if you will. So these are great tips. I'd love to chat more about any of your portfolio companies, things that have gone exceptionally well, or mistakes that they made. What have they done wrong that might be valuable to the companies in the audience?
Yeah, I think one of the areas where companies can go wrong is not actually focusing on margins. And there is this belief of if I'm growing GMV, all other things are going to be okay. At the end of the day, that's not true. And so certainly your top line numbers matter in marketplaces, but there still needs to be a focus on the underlying economics. You need to make sure that you're able to capture enough value to kind of pay not just for the actual transaction itself and the cost of doing the transaction, but the customer service and all the other, and the customer acquisition, all the other things that kind of sit below just basic COGS, right? So from that perspective, I think focusing on economics from day one is really important. And I do think we saw a lot of marketplaces go through waves where they focused on top line and ended up suffering underneath. And you see companies correct.
Yeah, I think I'd pick up on what Steph's saying is that I think the universal thing that we see that companies struggle with is that if they test and iterate without measurement and KPI, you sort of like fail to learn, and you fail to figure out where you should be allocating time and resources. So I think you have to have discipline in the way in which you learn, and that's probably the biggest mistake is not putting in analytics and instrumentation and understanding your business very clearly from the beginning, even when there's very sparse data.
So I've only been an investor for a short while, and I've already made mistakes. I've had buyer's remorse on deals. I'm not going to mention which ones. And one of those deals actually had a successful exit, despite my buyer's remorse. So have you made an investment? You don't have to name the company, but what mistake did you make? So what did you miss going in? What preemptively do you wish you had known? What did you find out afterwards and say, oh darn, I wish I had known that in advance?
Look, there's so many things at an early stage that can go off the rails, right? There could be legislation that gets in your way. I know there's going to be a panel with Jane later today from Goodwin, who's gotten a lot of our companies probably out of some trouble, and a lot of probably people in the audience out of some trouble. Look, there isn't. I can't point to any one thing. Sometimes you back the wrong founder, right? And at the end of the day, like that's. Great founders will find a way to kind of move around and pivot, but sometimes you picked a market that just doesn't have what it takes to be big and interesting.
Mm-hmm. Mark, any valuable lessons learned or things you wish you had done differently, preemptively?
I think these are not so applicable to the audience, but more reflective. I think the number one mistake that you sometimes make that's you fundamentally can't correct is picking the wrong founder, and I think tends to be more. What we found, at least for us, is that if you have, if you're thematic about what you're looking for at the earliest stages, you might not pick the right team, as opposed to the team helping you understand why that market should be important and why they're the right team. And then second is maybe, I think that I tend to be very direct and have challenging relationships with challenging in a positive way in the sense that I challenge them and ask them difficult questions, not challenging as in, but I think where I've regretted when I haven't spoken up at times and maybe sort of questioning things, that's sort of been one of the regrets. And so I think having an open dialogue where you can have a back and forth with your investor is really critical. And that ultimately we're backing founders that we want to make the decisions, but we're also looking for folks that are open to a broad range of opinions and feedback and willing to be challenged.
So maybe something more relevant to the audience, what can they do to best prepare if they were pitching you, what's a home run?
I think, one thing I'm not sure that every founder realizes coming in is be prepared. You really need to be prepared to have, in your marketplaces, I think you need to be prepared for the transaction, either for us to participate in the transaction and have a chance to kind of understand it as a user, or us to be able to talk to folks on either side of your marketplace, right? And so those referenceable customers are going to really matter. And either we will find them or you will help us find them. But I do think that should be in the back of your mind as you think about, hey, those early customers are really valuable to you. I don't think you give them to every investor to talk to. You don't share those early customers and those early users until the conversations are getting serious. And that's the investor's job to kind of let you know that too. But I do think it's fair to say you should be prepared for the folks that are participating on your platform to be the proof points and the voice for the things that you can't give in terms of the Excel spreadsheets of real data.
I think having a sort of clear, concise deck is important. and one where you can speak broadly about the business. So that means like from very detailed things to vision. I think Sequoia actually does quite a good job of outlining what a deck should have and what you ought to be prepared to talk about in meetings. So I think that they have a nice resource on their website. But
Good. Questions from the audience? Now's your chance. Something you're dying to know.
What are typical traits of a distinguished founder?
So typical traits of a distinguished founder. What are the personal characteristics? You say they're important. What are the ones you look for?
I think you said grit earlier, right? I mean, to me, this is really hard, right? And being a startup founder, marketplaces are really hard. There's a lot of moving parts, and it's every time you hit this new step function, it continues to change. And so I just think that grit and perseverance that it takes to, no matter how hard it is, no matter how many obstacles in your way, still being reasonable, recognizing is it an obstacle that really can't be overcome, that ability to kind of push and push through and persevere is probably the most essential thing, especially early on.
yeah, I mean, I think what you look for in a really, really special founder is sort of what we call, in the beginning, they can be cockroaches, essentially survive pretty much anything and thrive. And, it is really hard, and it doesn't get easier. The challenges just become different. Managing and relating to hundreds, if not thousands of employees is a totally unique challenge. So we also look for, is there leadership potential beyond survival? But the primary thing that we look for at the stage at which we invest, will these people survive long enough and figure it out so that they can have an opportunity to build something that is scalable? And then will they have the ability to recruit and recognize where they're strong and where they need help?
Yeah, I wrote a blog post recently about, are you a hill figure-outer or a hill taker? So are you better at figuring out which hill to take or actually taking the hill? And recognizing which one you are is important, because then you can surround yourself with the other. So do you think one of those skills is more important than the other? Or how, if it's a continuum, what do you look for in a founder?
I think you got to kind of balance both, right? And again, it's not founder. You shouldn't say founder is not all of you, I'm guessing, are solo founders. That's part of the reason a lot of companies have co-founders, right? It's your co-founder is not just there to do his or her job of whatever the title is. They're also there to kind of be the kind of id to your ego, right? And so I think that's if you don't as a founder, and whether you're a solo founder or a founding team, have what you think are the essential components, then you need to be thinking about how do you fill those major gaps in terms of the team. But at the end of the day, the leaders of the company, the founders of the company, have to have vision.
Anything to add?
I think it's ultimately commitment. Unless you are a multi-time founder that has an explicit agreement with a venture fund that you're going in and you say, we're going to give this a year and a half, this is a really crazy idea. Like, we want to know this is everything to you. I know that's somewhat unpopular in today's sort of, hey, have a balanced life. We also want people to be sane, and so there is we want you to have outlets in order to like decompress, but it's really, really challenging. It can be incredibly rewarding, and that's why people do it. But I'd say that's the number one thing.
When I joined Odesk, I didn't found it. I joined the company very early on. There were a bunch of surprises, some positive, some negative. I got in and found out that, holy smokes, we're really onto something, but oh my gosh, this is really broken. There was some plus and minus. And when I look back and say, gosh, the path we navigated through, it's amazing. We slipped through a lot of knotholes. So any great surprises or wisdom or things that you've done exceptionally well, like, you talk about Poshmark having that early win, but were there any pivots? Like, just by way of example, on Odesk, we originally started by charging a 30% markup. We had a high rake, but we were also high touch, and we decided to go to no touch. And by going to no touch, we removed a lot of the friction. We went to a self-service platform. We lowered our price to 10%, and we took off. And I just remember making that decision was really hard because we watched our revenue go down by 2/3 overnight, right? You're doing $1 million, and all of a sudden you're doing $300K in ARR overnight and it's risky, but it turned out to be the move that really propelled us. So have there been any?
You know, how many of you remember the original Postmates? The original Postmates was bike couriers and a B2B business model. And what you know as Postmates today was actually this side test app called Get It Now, which was about as explicit as you could get, and it literally was like, hey, you want a burrito right now for Mission Burrito? Like, get it now. I think that was actually the most popular order or something at the time. And so that was the consumer app with, you know, restaurants is not the only use case there. So, you know, early on, Bastien, you know, had this more of a B2B model for Postmates, and it was interesting, but it didn't actually, I think, wasn't the actual market that he thought it would be when he set out to build it. And so this consumer experiment ended up being way more interesting than this B2B experiment. And so, you know, eventually Get It Now transitioned back, and Postmates became what Get It Now was. And I'm sure a lot of folks don't even remember that. And so we just know Postmates is the thing that, you know, brings us our burritos. But, you know, so I think companies go through these shifts, and smart founders are willing to say, like, I might have a business here, and either I totally abandon what I have, or I let this business run, but I'm actually going to do some side experiment and see if it yields something interesting. And then they have to make the tough choice, because you can't put all of your resources behind, you can't put your resources behind both. So you have to make, at some point, you have to make that decision. It might impact in the short-term revenue, it might impact in the short-term who's on the team, but ultimately, you know, if you make the tough call right, you know, things can look very different.
Yeah, I think one of the companies where there's
Time's up.
Wow.
Thank you very much.